we have a really exciting talk, Fireside Chat, with Christian Rao, Senior Vice President at Mastercard. And to moderate this session is Gareth Jenkinson, Head of Multimedia at The Block. Round of applause, please, for this exciting one.
Good afternoon, ladies and gentlemen. For those of you that don't know me, my name is Gareth Jenkinson. I'm Head of Multimedia at The Block. I've been covering the crypto and Bitcoin blockchain space since 2017 as a journalist. Great pleasure to be on stage here once again in Paris Blockchain Week. Of course, I'm joined by Christian Rao from Mastercard, and we're going to have an interesting conversation about payments and a wide variety of topics. Christian, let's take it back a few years and maybe just give the audience some context as to how Mastercard became involved in the blockchain infrastructure space before we get into the meaty stuff.
And thanks for having me. It wouldn't come as a surprise that we come from a payment first angle, and we've been innovating in the payment space for the last 60 years, and obviously payment doesn't happen in isolation. So it's always a function of how does the real world economic activity that basically triggers the payment, how is that happening? And of course, that is digitizing. And then you have technology that can support or facilitate the payment transaction itself. From imprinted cards to magstripe to chip to NFC and so on and so forth. And of course, also this is evolving. And then if you go back 5-10 years in time, there was a first need for consumers to move money from the fiat world into the digital asset space. And obviously cards are a very interesting tool to do so, right? And then there's also, or it became apparent that cards can be a really compelling, what we would call off-ramping tool. So a way for people to use their digital assets, in the real world. And this is basically how the whole, what we would call digital asset cards, digital asset supported cards, started, some years back. And ever since, this has very much evolved. And I dare say since 2024, 2025 for sure, from our perspective, stablecoins have emerged or have sort of solidified their position as a key product in this digital asset ecosystem. And we believe that they have a lot of innovative capacity in them. So that's why we play. And again, to give a very short answer is, it's technology, our life gets more digital, so payment needs to get more digital.
I think it's fair to say now that, cryptocurrency exchanges and quite a few different platforms offer users, crypto-enabled cards, and it's largely Mastercard and Visa that are providing that service. When that first started happening, was there a significant barrier to entry for Mastercard and the Mastercards and Visas of the world to understand what these services were, how they worked, and then be like, okay, we can actually provide the service for payments with these cards?
Yeah, for sure. I'm not going to deny that when you look at what Mastercard has been operating, we would be deeply rooted in the TradFi end of the market, right? Very much focused on compliance, regulation, consumer protection, and so on and so forth. And especially some years back, I would say that not all of these criteria were sort of at a point where we would just know or feel comfortable how to engage in this space. So it definitely took a lot of learning on both sides, our side and the digital asset platform sides, to understand, how the other party thinks. And then I think also there was a lot of sort of harmonizing forces. Like if I look, for example, at crypto regulation, whether it's MiCA, Genius, Clarity, that obviously helped a lot because it provides clarity around certain regulatory questions that make it then possible for us, or gives us that level of comfort to engage in this space. So it was definitely a journey, for sure.
Yeah. how does it then now fit into like, the last 50 years of what Mastercard has done in terms of this innovation, moving, transferring value on blockchains? Is there a belief that it's quite symbiotic to connect TradFi and DeFi in this kind of way, especially with the services that Mastercard offers?
I do believe so, and it's not the first time. I mean, crypto is not the first, I would say, significant evolution of payments, right? If you think 10, 15 years back, the first, what was then called fintech now has arrived in the mainstream, and some of these first generation fintech players are now among the biggest, financial services players. So I do believe that we will see a similar trend, and I see already the first signs that some of the players that started as crypto first players, they are sort of edging into more fiat-like services, whether it's, offering current accounts, offering fiat-like services. So I do believe that there will be a convergence between these two worlds, or a coexistence. And it's a bit like if I look, for example, at software, right? Open source was supposed to kill the traditional software model, and then I think it basically evolved to be something that combines the best of both worlds, and I believe this is quite likely where financial services and payment is headed.
I'm just going to gauge the room here and give a very personal anecdote. Who here uses some sort of crypto card? Like if you have a Binance account, crypto.com, and you use a card that is enabled by Mastercard or Visa. I do. Okay, actually not a lot of people. An interesting story. So I live in the Netherlands. I have an ABN AMRO bank account. I went to Bitcoin Vegas last year, and I tried to pay for things with my conventional bank account, and I just got bounced. I used my crypto.com card, and it works everywhere. Like way more seamlessly than the TradFi banking app that I have. And I found that very interesting. And my question is that down to the infrastructure that cryptocurrency exchanges have built that's perhaps more purpose-built to just be global? The card service itself is still this card is a Visa card, so it's not a Mastercard, but it's good.
It comes a bit as a surprise, because typically the way I would describe it, the person that you interact with, behind the cashier, they typically wouldn't care. So let's say you spoke about a crypto.com card, you would be in front of me in line, and I would have a Deutsche Bank or HSBC card. So the person that sort of receives the payment that you speak to, they wouldn't be able to tell the difference. So we would need to spend some more time to understand why that is. But in reality, it should be the same thing. In all the crypto-specific heavy lifting, that is all happening on the digital asset platform. And that's very key, because nobody but the licensed entity touches any crypto in that flow. So that's maybe also worthwhile pointing out.
Yeah. Let's talk about stablecoins. Transaction volumes are in some time instances exceeding Mastercard's own volumes and scale. Is that something that worries you, or is it just a natural progression of money, and this is a very good form of money that we have now in stablecoins?
I would say that's an unfair comparison. Seriously, because what we are doing is real-world economic activity, and what we see in stablecoins, they're still used to a large degree for crypto trading and financial transaction. So I don't think it's really apples to apples comparison. That would be the first response when you look at the numbers. Second, of course, we think it's a great thing, right? Because that just demonstrates that this term that crypto is using a lot, institutional adoption, is getting there. And we definitely believe that properly regulated stablecoins have a very big role to play in financial services.
You're already doing that, right? You've got a partnership with Circle in Europe. Do you want to talk a little bit about that and what that's doing?
Yeah, it's Circle and some others. So what we are doing today is that we are settling some of the the card transactions in stablecoins, and obviously consumers hold stablecoin balances in their wallets, on their exchanges that they can spend through these cards. And we believe that stablecoins, again, can solve for a lot of things that the traditional financial system, it's just not, it's not up to speed in a world where I have the world at my fingertips and everything is expected to move real time. And some of the elements of the system are not there yet, and stablecoins can definitely solve for that.
Before we had this panel, we had a quick conversation about the BVNK acquisition. I know you can't talk too much about it, but can you talk about that move and what it might enable in the future for Mastercard?
For sure. And I don't want to assume that everybody is aware, but late mid-March, we announced that we will acquire BVNK, so this transaction still needs to complete. It's very important to note that this is not replacing, our card rails that work brilliantly in consumer to merchant, as we discussed, also facilitate digital assets. It's an infrastructure play that allows us to offer to our partners the ability to receive, send, store, and convert fiat, digital asset, and stable. So it's really an infrastructure move, again, to offer the best services to all our partners.
You've got the likes of MetaMask, BitGet, MoonPay, Kraken that are using Mastercard. What does the process look like when crypto service providers want to integrate and partner with Mastercard for a card service?
Okay, so I want to keep it a light touch. So I think the first decision is, do you want to become a Mastercard principal member? So do you really want to have work with us directly, or do you work with the partner bank? That would be, let's call it a white label bank. So that's the first thing these players typically decide. Both ways have their pros and cons, and typically there's an evolution. And then essentially you submit what I would simplistically call a application form. You say, we want to do this program. Then we look at the flow of funds, make sure everything is in line with our expectation when it comes to consumer protection, regulation, and so on and so forth. And then you essentially launch the product. Yeah.
What does that look like on the merchant side of things as well? Is it a different consideration?
That goes back to my initial point when I was surprised that your card didn't your Visa card, I should say, didn't work in let's say. So the merchant shouldn't care, right? For them, it is just another card coming their way, and they will be paid in fiat unless they choose to explicitly to be settled in stables. So that is very important, that they don't basically accept a crypto risk when it comes to regulatory risk or value fluctuation, that they don't opt in. So that nothing really changes for them.
There was a statement I saw online saying that Mastercard is committed to 100% tokenization of European e-commerce by 2030. What does that actually mean? What does that look like? And what's the hardest part of getting there?
Okay. And yeah, I reconfirm that. I just want to qualify here because all the people in these kind of events think about tokenization, or it's going to be on chain. So when we say tokenization, think about it as, for now you have a 16-digit card number. And when you put that card into your Google Wallet or into your Apple Wallet, they create a digital alias or twin almost, right? That can only be used in this context. The beauty is if this token can only be used with this device. Then think about, a lot of you will have their what we call card on file. You save it with a digital merchant, a digital service provider. If these platforms get hacked, and you store your clear card number, this would obviously need to be replaced, which creates friction, cost, and so on and so forth. And when we say that we want to tokenize all these e-com cards, is essentially that we don't want to see any clear card numbers floating around the internet, to put it simple, but only have these tokens, because again, it offers higher security and actually also higher conversion rates for the merchants. So yeah, it's a key technology. Actually, this first generation tokenization is a key technology that powers a lot of the innovation that we see in the market.
It's an interesting correlation to like the origins of Bitcoin and you know the move to sort of human readable like you know wallet addresses and that kind of thing. So I find a nice correlation there. Mika's live in Europe. Has that made your life a lot easier to work with a lot of crypto service asset providers?
100%. 100%. And I heard that from some of our partners on stage, like senior exchange people, and they said, Mika is a lot of work, you know, it's cumbersome, but then at least you know the rules of the game, right? You know what to do. And I believe that regulation that puts consumer protection first and aims to support nuanced and sustainable innovation and provides a level playing field, it's almost essential for financial services. So I do believe it has provided clarity to the market, which for me is a prerequisite for players such as Mastercard also to engage.
Is there any specific sort of technological advancement that Mastercard has been watching in the wider blockchain and crypto space? Because I think there's been so many amazing innovations that could potentially help payments be faster, be cheaper. Is it something that you have a specific research team looking into and constantly evaluating how we transfer value on the internet?
So we work with a lot of the, I would say, leading companies in the industry, and obviously through these conversations we learn a lot of things beyond the pure payment. Obviously we also have product teams and strategy teams that scan the market and see, you know, where do we want to position ourselves. When it comes to technology specifically, I think stable coins, and again it's coming from a payment angle, are something that we really spend a lot of time thinking on and using. And then I think agentic or agent is obviously something that you need to have high on the radar.
And that's a complicated thing to solve, right? Because once people start using more agents to do things online, there's no proof of personhood. And I don't know if Mastercard has a specific solution or the teams are thinking about this quite critically.
We do, because, and I think there's different levels or different use cases for agents. So there's the, let's say, relatively relatable use case where Gareth 15 years back would use his computer to buy something online. Today he uses his smartphone to buy something online. And going forward, he will use his agent for frictionless, you know, browse, decide, and obviously pay. And of course, that comes with new things to solve for. First and foremost, you need to have verifiable intent. Gareth, did you really want to buy these 2,000 pairs of shoes or whatever it is? Then you need a secure tokenized payment mechanism that the agent can use. And then you need to have a verifiable agent that basically makes a transaction on your behalf. And yes, we do have solutions for this. Let me call it the evolution of a consumer purchasing journey. And then, of course, there's also these B2B microtransactions that all the agents will be doing or not, you know, where programmable money such as stable coins and agents will interact. And again, I think this is very new. And I get back to my point, that first level of tokenization that we spoke about, this will be essential because also when we speak about agent or agentic commerce, you know, things or concepts that we hold very dear, such as, you know, authentication of a user, authorization, you know, all the payment anatomy, that will remain, but we just abstract it away from the consumer so you can really enjoy your agent e-com journey.
I think it's fair to say that there really is a coalescence of TradFi and the entire cryptocurrency ecosystem, and we're all using these cards, we're all using these services, and they're very much interconnected. We've run out of time. Ladies and gentlemen, thank you very much for joining us, and enjoy the rest of Paris Blockchain Week.
Thanks, Terry.
Welcome to Signal Week.